Okay, video is on.
Video is on. Let me get this video on.
Got that video on. On deck.
All right.
All right.
All right. So, welcome everybody. We finally on deck, man. This is the first episode. We're gonna go ahead and shoot this. This one is definitely raw. So bear with us. We got the first one going. That's all that matter, right?
Right.
On deck, episode 1. So today we have with us the lovely Afia Owusu. First of all, let me say my name. My name is Charles. Most of you may know me from various different things, but that's besides the point. We'll get to that later. Today not about me. Today is about Miss Owusu and what she got going on with her business. She is a mortgage consultant, and from my understanding, she's very good at her job. She's one of the best at it. She's been doing it for over 20 years now, and she's looking to expand on her business. So I got a couple questions for her, and this is how we plan on doing it on deck. I mean, the videos will get better, but you know, we just gonna have the show on a nice deck, in nature, beautiful weather, you know, just chilling, but getting to know some of these entrepreneurs, and well, not some, a lot of
them.
entrepreneurs and what they do, and we all stay connected, learn some things along the way. So here we go. My first question for you. First of all, let me let you introduce yourself.
Okay, like you said, beautiful introduction. Thank you for that. I am Afia Owusu, and I've been doing mortgages for the past 22 years, and I specialize in residential, first-time home buyers, commercial loans, anything money. My name is the Money Lady, so anything that has to do with money and mortgages, I specialize in.
So, what is some of the key factors that people should consider when choosing you or your company as a mortgage for mortgage consulting?
I would say, first of all, in a mortgage consulting, you want somebody like me, the Money Lady, that will have a vested interest in you accomplishing your goals. First and foremost, I got into the business because it was hard for me as an African American teenager when I first bought my first house to get a loan. So that was my passion, to help people. You got to have somebody that loves what they do. What we do is a lot of work, so you have to love what you do. You have to be responsive. You have to know all of the programs. You have to know everything that the underwriter will ask for. So you need somebody that knows A to Z when it comes to mortgages when you're picking a consultant. And if you choose my company, that's exactly what you'll get.
Okay. Quality customer service. That's definitely a plus in being an expert in your field. So what are the current trends and changes in the mortgage industry that individuals should be aware of?
The biggest trend everybody knows is all over the world, all over the social media. Rates have gone up. That's a trend that's going on that is going to stay consistent where it is right now. I will tell everybody, like I tell most of my clients, when I first bought my first house, it was 12.5% interest rate. So 6% interest rate, 7% is not a scary interest rate for me. What I would tell clients is that with that trend, look at your payment, look at what you're getting, which is a house, from renting, throwing away all your money every month, to buying a house. Even though if the rate is high or low, you're buying a piece of property for your legacy, for yourself, and for your kids. So that's another trend. A trend is also where people are buying a lot of investment properties. A lot of people want to be real estate investors. I specialize in that. I have money for people who want to do a rehab. You buy a house for cheap, you put money in it, you sell it for high. I have money for investors that are self-employed, so they don't want to show their income. So I have a loan with no income showing, no assets for a refinance. I have foreign national loans. That's another trend. People from outside of the country wanting to invest in America, instead of just having a vacation home or getting an Airbnb, they'll actually buy a house over here. I have a program for those people with no social security number needed. So there's a program for every single thing. Mortgages and real estate is a trend in itself, and it's always going to be trending in the right direction.
Cool. A lot of trends. Loans is definitely a trendy thing. Like, I know a lot of people buying houses right now. A lot of people buying businesses and houses, so everybody upgrading. So yeah, that's something to look out for. Some of these good loans and grants too.
Oh yeah.
And grants. I don't know if you got access to that type of information as far as buying houses or what have you, but
100%. Definitely contact me, because there's a lot of information about the grants to buy houses. So contact me directly and I'll give you that information.
Okay, so what role does credit scores play in obtaining a mortgage, and how can an individual improve their credit score if it is lower?
That's a great question. Thank you for that one, Charles. Credit score is very, very important. Credit score is the first fundamental thing I'm going to ask you, because your credit score is going to be a depiction about how you've been paying your bills up until this point. That's what a mortgage lender is looking at. So if you have a 500 credit score, you're going to need some help to get it up to 580. We do loans, believe it or not, with down to 580 credit scores, FHA, and we actually help you with a down payment. You can get more information from me on that to go into that program. But credit score is very important. If you have a lower credit score, I can help you and guide you in a way to get to the point where you are ready to buy. And then if you have a high score, that's great. Some people have high score, but then they have high debt. So within the credit, you have the credit score, you have the debt, and you have the payment history. So all those things I'll tackle once I do my consultation with each individual person. I'll go over the full credit report, the full tri-merge credit report.
Okay. Definitely hit her up. If y'all got y'all need to get y'all credit fixed, y'all definitely need to holler at Miss Owusu. She sound like she knows what she's talking about. All right, so when is the right time for someone to start looking for a mortgage, and what are the initial steps they should take?
The right time, if, let's say, for example, somebody is renting a house and they're in a year lease, don't be afraid. You can give 60-day notice to your landlord, and that's when you have to start looking for the mortgage. Right when you decide, I'm thinking about getting a mortgage, I'm thinking about not renewing my lease, or I'm thinking about getting out of my lease, that's the time that you need to decide. If you're asking me the way that I thought, soon as you graduate from college, or if you don't go to college, you go to technical school and you start making money, that's when you should really decide to start looking for a mortgage. Try your best not to rent at all, if anything. Stay home, then go rent, and then move into a house. I would look for a mortgage immediately so you can start stacking your equity and your property when you buy low, and then by the time you get to a certain age, you can use that for retirement. And I'll go more in detail on that when I have a consultation. But to answer your question, the right time to buy is now.
That's always the right answer.
Now.
It's right now. Right. So what documents and information are typically required when applying for a mortgage, and how can individuals prepare ahead of time?
Great question. Preparation. The documents that you need to buy a house are 2 paycheck stubs, 30 days worth of paycheck stubs. So if you get paid 4 times a month, 4. So 30 days worth of paycheck stubs, 2 months of bank statements, And if you have a 401k, then we'll need to see the last quarter of your 401k and also your W-2s for the past 2 years. So it's a checklist that I'll give every client that passes the pre-qualification for the credit. I will send you a detailed checklist via text message or email of what I need. And all of those items is to encompass what your financial state is right now with your credit, your income, and your assets. That will help me qualify you for the loan.
Okay. Now, what about the programs? Like, are there any programs or initiatives that's available that can help industry secure like mortgages more easily or with more favorable terms? Like, is that?
Are there yes. So the programs, there are a lot of programs out there. The best ones are the first time home buyer program, where you get down payment assistance. So normally you would have to pay 96.5% of the purchase price, and 3.5% would have to come out of your pocket. So with FHA, that's one of the better programs to help people get started, because a family member or a friend can give you that 3.5%. Your job can give you that 3.5%. If you come to the Money Lady, I can give you that 3.5% with the actual lender that I choose to send your loan to. They'll give you a bundle.
Okay.
They'll give you the big loan and they'll give you the small loan. You can decide whether you want to pay back that small loan or whether you want to let it be forgiven. The only difference in that is that you'll probably have a hit to the interest rate of like 1%. But if somebody's giving you a house at 100%, I don't care about what percentage I'm going to be paying on my interest rate. Keep in mind, the interest rate is not what you look at. You look at the payment and you look at the savings that you're going to be getting by buying a house versus renting. When you rent, all the money that you pay is going to pay for the landlord's mortgage, not yours. So that's what I always tell people to think about when it comes to, oh wow, I'm gonna have to start paying this and I gotta do this. And keep in mind, you can always come back to me and refinance when the rates get lower.
Okay.
So the house is yours. You can do whatever you want to with it.
Okay. Yeah, I'm not gonna lie. I was looking at your website and I saw you got a lot of options on there, a lot of loan programs and stuff like that. So I was like, okay, all right, yeah, like she got a legitimate program going on here. So definitely holler at Miss Owusu for all your mortgage needs, man. If y'all y'all need to. What's your website?
It is stoprentingnow.biz.
Stop renting, people, please. Stop renting.
That's why I chose that website.
Now.
Right now.
Make the decision now.
Absolutely.
Call Afia now. Reach out to her, right? Okay, so, all right, so we coming up to a couple of our last questions. We got quite a few questions, right. But let me hit you with this one. What are the most common misconceptions or myths about mortgages that you often encounter in your line of work?
The myths are that you're never going to pay off your mortgage. People always say that. I hear a lot of people when they buy, oh, my auntie said I'm never going to pay. My grandma said they never going to pay. That's why they never bought a house. Okay, well, so they don't own anything. That's number one. So the myth is that you're never going to pay off your mortgage. You are going to pay off your mortgage. I have secrets how to pay off your mortgage 7 years faster, 15 years faster by doing different tricks that the lender won't show you how to do. Right. I can tell you how to do it to get it paid off faster. Another myth is that your house is going to become upside down. When the market crash hit in 2008, a lot of people's houses is what we call underwater because the value was low and the mortgage was high. And that had a lot to do with the feds dropping the interest rate to 2%, 2.5%, 3%. I have a 2% on my house right now. Mm-hmm. That's good for me, but that's not good for the Federal Reserve, and it's not good for the housing market because if everybody decides to stop paying their mortgage, a lot of people are going to go under foreclosure. So many things happen, and it affects the value of the house. So that's another myth. Another myth is ARMs. ARMs on an interest rate is good because If the rates are high, you get a lower rate with the ARM, and then you get a lower payment for 3 years if you choose a 3-1 ARM, 5 years if you choose a 5-1 ARM, 7 years if you choose a 7-1 ARM, and so on and so forth. I think it goes up to a 10-year ARM. So that is not a bad thing, because that means that your rate is locked for those years, 3, 5, 10. A lot of things are going to change. Values are going to go up. Interest rates are going to drop. You're going to want to do an upgrade to your house. Somebody may have started off buying a house and they didn't have a family. 4 or 5 years later, they have 2 kids. You need an upgrade. I'm going to tell you secrets about FHA loan, how you can have 2 FHA loans at one time. That's another myth. You can't have 2 FHA loans at one time. You can. Call me if you want to get that secret on that, how to utilize and work the system in order to work for you.
Okay. How do you assist clients in navigating the often complex and overwhelming process of mortgage applications?
The way I do it is the old school way. I hold hands. I like to hold hands with my clients. I like to treat my clients like if that was my brother, my husband, my dad, my mom. I'm the type of mortgage consultant that cannot sleep at night if I feel like I did not give somebody a good deal, or if some of my other colleagues, they're like, I don't care, I'm going to make $10,000 off of this person, but they're not going to be able to pay their mortgage. They're going to eventually go into foreclosure. You know what I mean? I have people in my life that have been through things. I have been through things myself. So I hold your hand, and anybody that knows me, my kids, my friends, I will be out at 8 o'clock at night, 7 o'clock in the morning. If my phone rings and it's a client, if I can't pick it up, I'm going to text you right away. Or I'm going to pick up the phone, because a lot of you all that are buying and that are refinancing, it's one of the most stressful things it can be if you don't have that person to hold your hand, be there for you when you have a question. Realize that there is no stupid question. You're asking that question because you don't know. I'd rather you ask me than you go ask somebody else that will give you the wrong advice. So that's how I help people. I'm very, very hands-on, and I also have loan officers that work for me. I won't hire anybody that's not going to give the same service that I give. Customer service, I feel, is key when it comes to dealing with this process, because it is very complex.
Okay, it sounds pretty complex. But business tip 101, go above and beyond for the customer. You always will win, and the customer win too. So hey, it's a win-win situation. We love it. Okay, so what are some of the potential red flags individuals should watch out for when dealing with certain lenders or mortgage products?
Bait and switch. I'm on the phone with you, ring, ring, ring. Hi, Mr. Dunnington. I can offer you a 5% interest rate, blah, blah, blah. When you get the paperwork, it's 7. Or your payment was going to be this. When you get the paperwork, it's something else. Make sure that you have everything in writing. The loan application. Okay, thank you for the lender is automatically supposed to be sending you this stuff. If you do an e-signature sign-in documentation and you don't get that documentation in your email back, that's a red flag. RESPA law is, once you put your name on the dotted line, you should get some type of proof of what you signed. And that's the documentation that you're going to be using. A huge red flag. If a loan mortgage consultant asks you for money up front, if I say, Charles, give me $5,000 to help you get this house, to do this application, in order for you to get this house, that is not allowed. You can't do that. Now, they can charge a consulting fee trying to help you to get to the point to buy. And then when you're going to buy this particular house and you're doing the application, the only people that you're going to be paying up front is the appraiser. Before you get into the house, you're going to pay for the appraisal because they have to see how much the house is worth. You're going to pay an earnest money deposit, which is basically like a security deposit for mortgages versus renting. But that that earnest money will go towards your purchase. So anybody that's asking you for money up front for not when the job is not done, that's a huge red flag.
Right. Okay. Okay. Man, look, this is a lot of information. And she got a lot more information to share with y'all. So, y'all, if y'all like what y'all hearing right now, just go ahead and click the button. Go ahead and click the button, man. We definitely like clicks, and we like thumbs up and subscription. So holler at your boy. We still on deck. We got Miss Owusu spilling the beans. She giving you everything you need to know about the mortgages. So we just gonna keep the business. We gonna keep the questions going. So, but how do mortgage rates and terms vary depending on the market conditions, and what should individuals consider when deciding between fixed and adjustable rate mortgages?
Okay, so the mortgage rates will change depending on the index in the margin, which is with the feds. That's the layman's term for it. So whatever the interest rate is, whenever you see the fast commercial go on the TV and you get 3% APR, la, 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 that's the annual percentage rate. So the rate is going to be determined on whatever the index in the margin is, and that's determined by the feds. Rates change 2 to 3 times a day. It can change 1 time a day. When the market was crazy and the rates were going up, we would have to lock loans like seconds. It can change. So that's something that the lender cannot foresee. We can gauge and tell you to lock the loan, but rates do make a big difference inside the whole grand scheme of thing. And then now the second question is, what should you choose, a fixed or ARM? It just depends on how savvy you are with your mortgage. When I first did my loan, the sixth house I bought, the third house I bought, I did an ARM because I wanted a lower rate right then, and then to give myself time to make more money, to get another raise, to make more money in my business. Then I know after 2 years it's going to go up, but the ARM always starts low. So if the regular rate is 6, the ARM may be 4.5.
Right.
So you're going to get that benefit. And then keep in mind, this is what I did, and this is what everybody should do. 6 months before the ARM adjusts, you need to be starting to look for another loan. That's when you would call me back and say it's about to adjust. Let me refinance to get out of it. And you may get a better ARM. You may get a lower ARM again, or you may get a fixed rate. So you choose the rate based upon whatever that rate is going to let your payment be.
Okay. There's a better ARM.
It's a better ARM.
Okay. So, and that's cool because I heard her switch up the lingo a little bit. I don't know if y'all caught that, but she switched up the lingo, and she didn't really tell you what an ARM was. But I asked her what was an adjustable rate mortgage. Mm-hmm. So, once again, that's going to be in the content. Y'all got to hit her up. She got the webinars coming out, the podcast. She's about to do her thing. And this is another thing that I definitely want this podcast to represent, is the up and coming. You know what I'm saying? There's a lot of people that need a platform to get on. You know what I'm saying? So that's you're on deck. We're here, right?
That's right.
So that's what it's about. Is helping people reach people, right?
Absolutely.
So back to the questions. What are some of the additional costs involved in obtaining and maintaining a mortgage, such as closing costs, insurance, and taxes?
That's a good question. A lot of people don't keep that in mind. So a regular mortgage payment consists of PITI, principal, which is this is what the house costs. Interest, this is the interest rate I'm charging you for the house. Mm-hmm. Taxes, which is what the county or the government says your taxes are for your particular place. And insurance, things that you can negotiate and to make a lower payment is the insurance. Say for instance, it's going to cost you $200 a month for the insurance. You can do a higher deductible, knock that $200 down to $150. Those are things that you can do. The taxes on your actual property. You can, if your income is a certain level, you can cut your taxes in half. Ask me about that. That goes through the county. So those are things that can help you lower your monthly payment by different tactics that you would ask me about so I can help you. And I always educate my clients on how to get the lowest payment possible.
Hey, who don't need a lower payment
Right.
every month? Man, look,
I do.
I mean, and it's a look. I understand. It's a lot to know, right? That's why everybody can't be the professional on everything. If you're not a professional on mortgages, you need to contact Afia Owusu ASAP. Okay,
I'm ready.
ASAP. So, how can individuals assess whether they should consider refinancing their mortgage, and what are the potential benefits and drawbacks of doing so?
Okay. I just got a call from my aunt in Detroit. She wants to renovate her house and do some improvements. That's a reason to refinance, because you can take money out of your house and say you need 60,000, you need 100,000. If you don't have a mortgage on there, you take that money out. The best place to take big money out is in your mortgage, because the interest rate will only you'll only be charged once a month. It revolves. It's called revolving.
Right.
Credit cards revolve every day. So if you have a $5,000 credit card at 20 point something percent, every single day that interest is hitting you, every day. With the mortgage, it only hits you once a month. That's huge. So getting a big amount of money in your mortgage, you're going to pay a little bit more in the payment, but a lot less in the interest. So if you need to do a home renovation and pull money out, that's a good time to refinance. If the kids are going to college and you got to put a big amount down, that's amount of time to refinance. If you're about to go buy an investment property, which is a big reason why you should refinance, take money out of this, get a little money, go buy an investment property, sell it, make a lot of money. That's another reason why you should refinance. So anytime you need extra cash, don't call your mom, don't call your dad, don't call your friends. Go into the equity in your house, because if you listen to what I said first, you need to buy now. When you get out of high school, college, whatever you're doing, you start making money, you're buying. Borrow your own money out of your house. It's your house.
Right.
You can borrow and cash out refinance. Caps at 75%. So if your house is worth $200,000, I can give you up to 75% of the $200,000. If it's worth $1 million, I can give you 75% of the $1 million. Whatever you owe, I'll take that out first, and then all the other cash will come back to you. Like the refinance I just did last Friday, he pulled out $149,000. He bought the house for $20,000.
Right.
He fixed it for $40,000.
Right.
He made a lot of money as a flip. That's another thing flippers, because I'm a flipper, flippers need to do. Refinance it, take the money out. He's investing it, and he bought 2 houses with that $149,000. And then he's going to sell the house by December and get the other 25% that I didn't give him.
Right.
The money is revolving. The money is revolving, and you always want to use somebody else's money to make money. Don't use your own money. I love using other people's money to make money, to shop, to do whatever. Use somebody else's money. Who is that somebody else? The lender. I'm the somebody else. I'm the lender. I'm the person that's going to let you use my money to make your money. Yes, I'm going to make some money on interest, but like the gentleman that I just told you on Friday, he's going to make more than the bank off of this deal.
Right.
And that's where I'm here. That's what I'm here to do. I'm passionate. I know you guys can hear it in my voice. I'm passionate about helping people use the system to work for them. Don't let the system work you. You have to work the system. And everything that I'm telling you is legal things that I have been doing in real estate that a lot of millionaires and billionaires have been doing.
Right.
Flipping other people's money.
Okay. Yeah, that's definitely one of the major keys to success. And like you said, buy early and buy now, to reiterate what she said. Yeah, so I don't know if y'all getting all this, but I'm definitely getting it all. And if I don't, I'm just gonna go back and watch this recording over and over and over again. So I suggest y'all do the same. All right. So can you share any success stories? For example, how have how have you helped clients achieve their mortgage goals or overcome challenges during this process?
A lot of success stories. I actually worked with the Ray Lewis Foundation with Ray Lewis and his mom,
Okay.
52 homes for 52 families. And most of that demographic was, I got 500 scores now. I got 400 scores. I got 600 scores. I don't know what to do. I'm never going to be out of this situation. I'm in Section 8. I want to buy. I had a bankruptcy. I had a divorce, and I still want to buy. I specialize in that. Most of my clients are success stories. Most of my
Of
clients are
course.
first-time home buyers. Most of my clients are first-time investors. I look at all my clients as successful. I love all my clients. They're all my favorite clients because I put so much into them. But on my page, you'll see a lot of success stories. On my Instagram, you'll see a lot of pictures of me with people at closing. I like to go to closings. Most lenders do not go to closing. They just give them the money, collect their check, and they're gone. I want to see the family. I want to see the dynamic. I want to try and talk to your son or your daughter so they can see the moments that mom and dad bought me this house or I bought this house for myself. So all of my stories are success stories. Even with the Ray Lewis Foundation, I also work with Torrey Smith and his mother. She's a real estate agent. Monica Jenkins, that we used to work together as well. So I work with a lot of some celebrities and some people that are not celebrities, but everybody is a superstar to me. I love all my clients.
Okay. Okay. Cool. 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 Um, so, what are some of the strategies individuals can employ to pay off their mortgages faster or reduce the overall interest paid over the term of the loan?
That was the secret that I was telling you about. Just to go into a little bit depth, if you pay an extra payment, if your whole payment is $2,000, when you get that tax return, we're not going to buy no TVs and all that. Whatever is left over after you pay that extra mortgage payment a year, you'll drop your mortgage down by 7 years. Just that extra
Mm,
payment. Now
okay.
the tip is, don't pay it online. Mail it, write a check, and in the memo section say going to principal only. It's very important. Let me repeat that. Everybody likes to pay their bills online, no problem. But you need to write a check and in the memo section put that payment is going towards the principal only. That means that they cannot use that payment for the regular payment. It's going towards your principal to drop down what you owe. They don't want you to do that because they want you to pay that full amortization schedule. And if you look at an amortization schedule at closing, that's the time that most people like to faint. Because if you borrow 200,000 and they amortize your payment every single month for 30 years, you're going to end up paying about double, if not triple, what you borrowed from me. So hit in that principal as much as you can. If you can make 2 payments a month, or if you do biweekly payments, it ends up giving you 13 payments in a year. So that's another trick too. Like I like to pay my car payment bi-weekly. Every time I get paid, I pay my car payment. If you do the same thing with your mortgage, you're also going to do the same thing by saving it till the end of the year and paying an extra payment.
Okay. Cool. 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 Um, Great. Good tips. Good tips. And once again, if you guys get on that free consultation call with her, I'm quite sure she'll give y'all even more tips. And then if y'all buy into her services, the
You don't get it
tips,
all.
yeah, you're gonna get it all. I mean, and then on top of that, you're gonna get the excellent customer service and the above and beyond performance of Mrs. Owusu. So, but how do you stay updated with the latest developments and regulations in the mortgage industry to better serve your clients?
We have to do continuing education. So, and that's on a like every 2 years for licensing, and then we also just have a trend of just seeing the market. Since we work in it every day, we constantly get updates. We constantly get updates from the feds. We constantly get emails from them. The account executives that work with us, since we're brokers, will tell us the regulations. Some of the regulations
You said from the feds? Not to cut you off. You say, yeah, I get updates from the feds?
we get updates from the feds.
Oh, that's mean.
Because the feds are the ones that are driving the interest rate. So they have to let all the
Wow.
lenders know what the rate is. And the feds giving us that information will let us know how to push the client into a certain direction.
Wow. Okay. The feds. Wow. That's all I can say about that. What is your approach to providing the ongoing support and guidance to clients after they have secured their mortgage?
I have an open door policy. A lot of my clients that I've closed 6, 7, 10 years ago will text me, will call me, and ask me questions. I am going to admit I need to do better on following up and contacting them on a yearly basis. But you don't want to be prying, but it's not prying. They need help. So I'm an open book. Even after you close a loan, a lot of my clients ask me for help, advice. They refer me to their family members and friends, their coworkers. So I'm never really off limits. Once you have my cell phone number and I've done business with you, I'm going to service afterwards too as well.
Okay, so you sound like you're very referable.
Absolutely,
right?
very referable.
So and this is a good time to tell the people once again what is your website?
The website is www.stoprenting.biz.
And you also, like we was talking about earlier, just for those who just joined the podcast, you have a mortgage consulting business.
Mm-hmm.
You're about to start a podcast, right?
Yeah, I'm about to start a podcast about everything with mortgages, to just talking about all the different programs.
Different programs with mortgages, and then you're supposed to have like a little subsidiary podcast within that, called Cocktail Time, right?
Absolutely, Cocktail Time.
Cocktail Time. It must be that time because I
Listen,
can't even get my words out my mouth, right? But Cocktail Time, which is cool because you got. I mean, if you think about the concept, it's pretty cool. You go to work all day, and then when you get off of work, you go to happy hour, right? So it's cocktail time. You work hard and you play hard, then you go home and you do it all over again, right?
Absolutely.
This is how we do it on deck. So we just to let you know. Okay, so we down to our last couple of questions.
Okay.
This has actually been a very informative podcast, and for it to be the first one, I appreciate Mrs. Owusu to allow me to use her as a kind of not really a guinea pig because we on deck. She's on deck.
Absolutely.
And life is beautiful, right?
Beautiful. The sun is beaming. It's
only
beautiful.
thing you can do is be grateful, right?
100%.
So last two questions. Are there any tips or advice you can share with first-time home buyers who are navigating the mortgage process for the first time?
Once again, call the money lady first and foremost, and you call me now because you need consultation. The first tip is make sure your credit is good. Don't pay off anything on your debt until you talk to me. Okay. A lot of people pay a lot of stuff off, and it doesn't help. It makes it worse. That's another tip. A big tip: don't listen to family members and friends. Please. Not to hate on anybody, but when people are not at that level that you're trying to go to, they tend to discourage you from going there because they want to be on the same page. So don't listen to family members and friends unless they're giving you positive input. Ask me everything. There is no stupid question. Ask me everything, and I will put you in a home buying class for the down payment assistance. It tells you mortgages A to Z, and they give you a certificate. You'll do all those things when you come to me, but just call me and then we can move forward.
Cool. don't forget to tell them too. Like, you supposed to have some workbooks to go with this.
Absolutely.
With this seminar that you're supposed to do, the webinar. Right?
Absolutely. When I do the webinar, I'm going to have some free workbooks that I'm going to be giving to everybody. I want millions and millions of people to tune into it. I'm going to give it free workbooks, breaking down everything that I'm saying, in addition to coming to me to get the consultation. So I want to take care of it. I'm here to serve.
Right.
That's my job. I'm here to serve you. That's what I feel like I'm here for, and that's what I want to do. I want to serve the people that need me.
That's cool. So like, once you go through the workbooks, you pretty much have everything you need to do that particular thing that that workbook is teaching.
Keep you on target.
Right. So you know what I'm saying, it's a reference guide on top of anything. So I thought that was a dope idea when she told me. Last question. Is there anything else you would like to add or emphasize for individuals seeking a mortgage consultant service?
First, I would like to tell them to definitely stay tuned to your podcast, because you're doing a lot of good things here. I see how you're going to be bringing good things to the people. So stay tuned to his podcast and make sure that you do the likes and subscribe and all that, because I'm going to be on here a lot. So, and a lot of people are going to be on there. So I want you to stay tuned to his podcast. That's number one. And number two, just love and know that you can manifest anything that you want. You can manifest anything that you want with faith, with God, and with yourself, and believing in yourself. Once you have that, I think everything else will come together. Because once you have the faith in yourself that you know that you can manifest and will what you want in your life, you are going to be a first-time home buyer. That's going to be the first house that you buy. You're going to buy 10, 12 houses and make millions of dollars. That's what I want you all to manifest. And that's what I have to leave you all with. Definitely go to my website, www.stoprenting.biz, and reach out to me, and all my information will be in the bio.
All right, cool. So, hey, you got it here first, right here on deck, man. I want y'all to come back and pay us a visit. Thank y'all for coming through today. And don't forget to subscribe to the channel. And what else?
And give comments. We love comments.
Thumbs up. Definitely hit up Mrs. Owusu, the money lady, and holler at your boy. Peace.